Hi, everyone. Thank you to all those who are joining this webinar. We will give it a couple of minutes for anybody else who will be joining to join, and then start at 3 or 5 in a couple of minutes. I see the numbers are rising. Thank you to all those who are continuing to join the webinar. We're very excited to be hosting you today. Thirty more seconds, and then we can start the webinar. Thank you again to all of those that have joined us today. We're very excited to be hosting you in this very relevant topic of women building Africa. Okay, I believe we can start. Again, thank you to all those who have joined us. And we're very excited to be hosting you on this webinar of Women Building Africa. Thank you for joining us. My name is Wairimu Karanja, and I am partner and chief legal officer at Persistent. At Persistent, we are a climate venture capital investor and venture builder in the climate impact sector. And one of the things that we are very passionate about is achieving gender balance in all of our investments, because we believe that climate impact equates social economic impact on the African continent. So it is my pleasure to welcome you to this webinar, and also the amazing speakers that we have in this webinar, who are all very chosen and very passionate women in the climate sector. Now, before we get started, I'd just like to take us through some housekeeping. So in case you have any technical issues, please chat the host on the chat. So if you just click on host, or if you click on Persistent, you can chat the host on any technical issues. If there are, and during the Q&A session that we will open up, there is a Q&A tab on this webinar link. So please click on the Q&A tab for any questions. If you ask questions on the chat tab, they may get lost in chats. But if you ask them on the Q&A tab, we will be able to siphon those out very quickly. And please ask questions as we go along, and we will address them during the Q&A session at the end of this webinar. This is a 1.5-hour webinar. We will take about an hour to go through the discussions and have 30 minutes at the end for Q&A. I'll first start by introducing Persistent. At Persistent, we have a 12-year track record in investing and venture building on the African continent. We've got a diverse team of over 25 people from 11 nationalities, 80% based in Africa, 60% African, and 60% female, because 2X challenge and gender balance is one of our major considerations as a firm. And we have invested and advised over 265 million in assets under management, including advice working alongside Triple Jump in two funds, the Energy Entrepreneurs Growth Fund, which is a 120 million fund seeded by Shell Foundation and FMO, and the Energy Inclusion for Africa Fund, or CEI Africa, which is a foundation that invests as well in off-grid energy companies, where we work as a foundation advisor, and Triple Jump is foundation manager, alongside also Greenmarks, that is another advisor. As Persistent, we have invested 23 million on our balance sheet, and this year we are launching a $70 million fund by Q4 of this year, Q3, Q4, that will invest in climate and social impact companies in Africa. We have a strong track record of investors as well, and are proud to have among our supporters FSD Africa Investments, Qden International, BK Ventures, Shell Foundation, DPI Energy, as well as other funders that are coming into this $70 million fund that I've talked about. We are proud of the impact that we have achieved, including so far 6 million lives improved, 21,000 jobs created, 1.4 million tons of CO2 avoided by our portfolio companies in the areas of electric mobility, off-grid energy, so SHS, rooftop solar, commercial and industrial solar, energy efficiency, and productive use. And for the fund, we will also be investing in early stage companies in the agricultural transition and in the resource transition. So we are very excited about what this means to us. Our companies, about 80% are 2X compliant, because we have that as one of our requirements for investment. Now, why is women and investing in women really relevant? It's because there is a gap. Worldwide, according to the Flip podcast, about 2% of funding goes to women entrepreneurs. And in sub-Saharan Africa, about 11% of women-led businesses secure seed funding. That's according to the IFC. And there is, according to Alethea Capital, one of the leading gender lens investors in sub-Saharan Africa, about a 42 billion financing gap for women-led businesses. We also explored that in one of our seminal pieces on women, investing in women. And there is such an opportunity. Aside from the cost of inaction, there is an opportunity, because when we invest in women, we can boost Africa's GDP by 13% and above. And we also have research by the Harvard Business Review, by McKinsey, that show that diverse teams outperform less diverse teams on most of the scales that you can think about. So this topic is very, very relevant, not just as a global issue, but also as a sub-Saharan Africa impact issue, whether it's climate impact, fintech, or anything else. I talked a little bit about why this is important for us as Persistent, so I will not go into that anymore. I will go into introducing our speakers today, who I'm very excited to introduce, who represent a broad range of women trailblazers in their fields, including investors like Mia, who I will introduce, including growth stage developers and businesswomen like Nicole, and early stage businesswomen like Tolulope. And this is why it matters, because we need to overcome perceptions of self-doubt or perceptions of a lack of competence, so that we can achieve incremental change and so that we can foster the growth of women-led businesses. And now to our panelists. Our first panelist is Nicole Poindexter, who is founder and CEO of Energicity, a leading growth stage off-grid energy farm that is active in West Africa. Nicole, I'm very happy to have you join us. We are very excited. Please tell us a little bit about yourself and about Energicity.
Hello, and thank you for the introduction. My name is Nicole Poindexter. I am the CEO of Energicity Corp. Started the company about 10 years ago with the goal of providing electricity to the 600 million people in Africa on the continent who do not have access to it. And as well, approximately 600 million people who do not have access to reliable power. And so we were super interested in what we can do to help solve that problem. And as I said, started the company about 10 years ago, and since have provided electricity to about 100,000 people, so far short of the 600 million, but that's why we raise money, and that's kind of our raison d'etre, is to both provide that electricity, but also provide the means for people to be able to use electricity to increase their wealth. I'll pause there, but super excited to be part of this conversation and share some of the things that I've learned about raising money.
Thank you very much, Nicole. We're very happy to have you. And our next panelist is Mia from Koschitzky-Kimani. She is a partner and at Future Afica, which is also a very leading early stage investor in not just climate impact, but fintech in Africa. And Mia, fun fact, is also former partner at Persistent and one of my mentors when I first joined Persistent. So Mia, welcome, and tell us a little bit about yourself, aside from what I've said, and also about Future Afica.
Sure, you're too kind, Wai. Cool, yeah, so my name is Mia. I'm the managing partner at Future Afica. I'm currently based in Cape Town, and I started my career after being in consulting for many years, actually as a founder. Started a startup that was leveraging AI to help small mom and pop stores capture their inventory, and sold that to MasterCard relatively quickly, and then started my VC career at Persistent, as Wairimu said, because I always thought venture would be a great way to combine my love for sort of strategic thinking and my love for startups and sort of merge them into two. And Persistent particularly attracted me because we have a very hands-on venture building approach, and so does Future Afica as well. So I've been with Future Afica now for the last 3 years. We invest very early in the phase from $0 to $1 million of revenue, helping to accelerate also through our accelerator on that journey, which currently is an area where there's very, very little capital. And once you get sort of to $1 million in revenue, there's a lot more capital opening up for you. So we're focusing all our efforts to get startups through this phase, establish some semblance of product market fit, first customers and a team, and then help them raise more capital to grow from there. And it's great to meet you all. Very excited about the seminar. Back to you, Wai.
Thank you very much, Mia. And our next panelist is Tolulope Falola, exciting, a founder at Digiscape Energy Solutions, which is an energy solutions company, rooftop and CNI solar based in Nigeria. Very excited to have you here, Tolulope, as one of the leading early stage companies. Please tell us a little bit about yourself and about what you do at Digiscape.
Right. Thank you so much, Wairimu. Thank you for having us, having everyone here today, and for driving and leading this conversation. And just also say thank you to everyone that has joined this conversation. My name is Tolulope Falola. I am founder and managing partner at Digiscape Solutions. This is about the 8th year of running and running Digiscape. We are, I would say, female-led, and even in terms of the gender balance within the organization, I would say we're very female-led. We're a female-led renewable energy company. We're based in Nigeria. We currently serve about the 36 states in Nigeria. In the past 8 years, we've had the opportunity to work with C&I customers, SMEs, and our residential clients. I think we've onboarded over 800 clients, providing rooftop and off-grid solution to our clients in Nigeria. We have about 6 megawatt peak of solar references across Nigeria. We've actually also pioneered some landmark BSS solutions. And I would say that for me, having had experience, about 17 years experience in oil, gas, and utility in Africa, worked in developing and deploying energy solutions in about 9 African countries. So I think I come with that extensive energy sector experience and also project-based experience. And I'm just looking forward to, for us, it's how to amplify and how to really support the growth engines of Africa, as I call them, the SMEs. How do we democratize solar for SMEs, and how do we help them reduce the cost and the burden of power? How do we provide reliable and affordable power solutions to these growth engines, and how can we transform Africa? So thank you very much. For that, over to you, Wairimu.
Thank you, Tolulope. Now, I realize we are all dialing in, both panelists and participants, from different places. So maybe just a quick round. Nicole, where are you dialing in from?
I am in London for London Climate Week.
Excellent. Please represent us in London Climate Week. I am dialing in from Nairobi. What about you, Mia?
Cape Town.
Excellent. And what about you, Tolulope?
Lagos, dialing in from Lagos, Nigeria.
All right. So this is a discussion about the fundraising journeys for each of the great women entrepreneurs and investors that you all see here. So one of the questions when we were thinking about this that we thought would be great to share is from capital raising. What was your first capital raising experience? What was most memorable about it? And what was your biggest challenge? And I will start with you, Nicole.
Great. So when I started in 2015, started out had a crazy idea and got some friends and family to invest. And that was actually really affirming that there were people who believed in the idea, believed in me, that had known me for years, known me enough of my crazy to say, we're going to invest despite that. And so that got us off the ground. We had a product, we had some revenue, we proven the concept. And so then it was time for me to raise angel funding. And, the happy ending to the story is we did in the end raise $1 million, but it was really hard. And I definitely, reached out to every single human I knew. And, friends of friends definitely are an important part of the fundraising journey. But I had this one opportunity, and a bunch of people are saying we don't invest in Africa. A bunch of people are saying we don't invest in infrastructure. A bunch of, there were all these sorts of excuses, and I'll call them excuses. And this one person in particular gave me a chance to pitch to an angel who was interested in Africa. And he asked me a bunch of questions and I answered them. I was very responsive. I sort of turned my pitch inside out to respond to his questions. And then in the end, he was kind of like, oh, that was really nice to talk to you. Have a great day. And that was a little frustrating. Later in the afternoon, I saw this same guy and another entrepreneur pitched to this one guy. And the guy asked a bunch of questions and this entrepreneur refused to answer any of them and just kept going with his pitch and the things that he thought were important about the business. And at the end, this investor was pulling out his checkbook And that was my aha moment for thinking about pitching, and that really gaining the confidence that I know my story, I know the business's story, I know what's most important about our business more than anybody else. And, I started pitching with much more confidence, and was successful in closing our first million not long after. And, have since raised quite a bit more. But that one lesson of being really confident in our story and honing it to the key points was really critical to our being able to raise money successfully.
Yeah, that's incredible. And I think speaks to the need to have a balance between, sticking to your pitch and listening to the investors or answering the investors' question. I'm going to turn to Tolulope and also ask you, what was your first fundraising experience and what was memorable about it, whether positive or negative, whether a great thing or a lesson?
Right. Thank you, Wairimu. So in terms of our first fundraising, I would say we haven't had that opportunity to have like maybe some sort of like large scale, or large spend fundraising, but we've had like memorable moments along this journey. We're currently bootstrapping as a company, but we've been able to raise funds from, I think, family and friends. The first experience that I had was with family and friends. I mean, this was the first year of business, and 8 years ago, where solar was not very popular in Nigeria. The cost of buying power from the grid, from the discos, was very cheap. It was nothing compared to the cost of setting up solar. So, I mean, at that point, not a lot of people believed in solar, and they would even always ask you, does this really work? So imagine me asking my sisters and my husband, like, what, I have this idea and I believe this is the future. I know that, energy, electricity, and, all of this, and just sitting down and pitching to them. And they were just looking at me like, okay, you always seem to have bright ideas. How do we know this really is going to work? And, because at that time I really wanted to set up, the business and scale, bring in, just hire a few people, and also just to have some sort of inventory. And I remember they asked me difficult questions, and I was thinking, oh my God, I'm never going to try to raise funds from everyone, because I'm just going to do this by myself. Why are you asking me all these painful questions? But I think for me, it went well. We're standing here today, so it means that their investment didn't go to waste. But in terms of raising funds, we then also, I think in our year 2, we then applied for a women, I think it was a women loan, was being sponsored by FCNB She Ventures, and it was at 0% interest. And I think that was very memorable for us, because it was the very first time. I remember when I told my staff, and they were like 0%, like nothing. They want nothing back from us. They want no equity, nothing. And it was 0% for the first 6 months of taking that loan. And to be honest, that loan, I will see it as some sort of fundraising, because it then helped us to scale, expand. And for the very first time, we were able to import our own stock inventory. And then this, it just expanded our margins. Just helped us to grow the market. And I think that was very memorable for me, just from greed and just having like some sort of scrappy conviction about solar at that time, to where we're standing today with over 800 clients. I would say that was definitely a turning point for our business. So yeah.
Wow, that's amazing. And I'm hearing from both you and Nicole the fact that first port of call had been friends and family, because obviously if your friends and family believe in you, then they give you impetus to take it to the rest of the world. So that's really great lessons there. Now, Mia, you have fundraised both as a founder and in fact successfully sold your business, and also fundraised as a fund manager. Tell us a little bit about what was memorable in either instance, and also some of the challenges that you faced.
Yeah, good. First thing I would say, raising as a fund seems 10x harder than as a founder, if I reflect on those 2 experiences. Because at least when you're a founder, you have something to sell. When you're a fund, you just have a promise to sell of things you will do in the future. So that's, I don't know if it's comforting for anybody or not, but I think when I reflect back of the times when fundraising seemed to work well, there was always a pre-existing relationship. So when we raised funding for our startup, this is around 2017, 2018, we literally had nothing, and we raised, I think, $1.2 million on a fake sort of made up, prototype. And that seems like, even when I think about it, that seems crazy, but the reason why we did this is that one of my co-founders had a pre-existing relationship with one of the VCs, and they wanted to support anything he was doing. And so it's sort of, it mattered sort of what we were doing, but not fully, right? They just wanted to back him. And we, the other two co-founders, seemed reasonable. And so there's sort of is everything else sort of sounding reasonable? And then we trust this guy, right? The biggest fundraise we have done as a fund sort of follows similar notes, right? And in this instance, we received a $10 million check from a fund of fund, and we sort of only raise commercial capital, so it's a pretty big deal. And the guy never spoke to me. We had two GPs in the fund. The guy never spoke to me, and we'll come back to what it means to raise as a female. But he just wanted to back my partner, really. They had an existing relationship. He had invested a number of times with him. It's been going over 10 years. He didn't really care what he was doing. He just, whatever you're doing, I'll give you the money, sort of thing, within reason, all of that within reason. But that taught me sort of how important these relationships are. And in that same, we raised another about $10 million in this fund. It was a $20 million fund. All of that other 10 million was extremely painful, extremely painful. A lot of 50, 100K, 250K checks, a lot of effort. Sort of that's the other side of the coin, but the group of sort of the more painful part are people sort of we convinced of what Future Africa does, what it stands for, what it can do, but they didn't necessarily have trust relationships, right? And that's also a path, but it's sort of a painful path. The trust building path is a very long-term path, right? Sort of you should probably think about your relationships and that you might need for fundraising one day, but not build them once you need to fundraise, because then it's almost too late when you need that capital, right? So I think it's no coincidence that we also heard from the other panelists that their first success was with people who knew them and they had a trusted relationship with, right? So that's very important. And sort of, I guess then the question begs, like, what if you haven't built these relationships, right? And I think the reality is then the truth is you have to work harder to convince these people you don't have the trust with that they're almost getting a too good to be true deal given what you have built in your business, and then are willing to give it a benefit of the doubt.
Yeah, no, that's actually quite illuminating, not just for fund managers who are fundraising, but also founders who are fundraising. The fact that it's so important to either have relationships or work really hard at building relationships, because even as VC investors, we invest in founders. We invest in people. Yes, we invest in the solution and the product, but we invest in people the same way our funders will invest in us as people. That segues into my next question, and Mia, you touched on that, on who do you choose to build these relationships with? How do you select investors to pitch to? So I'm going to throw it back to you, Mia, on maybe some of the two things perhaps you considered in picking out whether at Duka Connect or at Future Africa the investors to pitch to. And then I'll throw it to you, Nicole, to also, from your experience, from the first experience, how you choose investors to pitch to. Mia?
Yeah, I mean, maybe we start with who are the people you want to build relationships with that ultimately want to be your investors or can be your investors. I would say choose the people you like and respect. the most, because you will, if you build these relationships, you have to invest time and energy and effort in it, right? And if those are people you don't necessarily like to spend time with or don't respect necessarily, then it's going to be a much more painful thing. And I think we've all gone through these phases where we're like, oh, now I need to build relationships. Let me go out and be super social now, right? And then that sort of dies down when you get super busy. I mean, it happens to me all the time. And I'm not necessarily a very social person per se, right? So it obviously depends on your character, but sort of you need then, for me, it's sort of I need to pick a small group of people that I will do that with. But I also know, because I'm not the socialite here, I need to partner up with people who are the socialites, right? And who are naturally more doing that. And then I can fill in something in the picture that they don't maybe don't have, right? I'm always the structure, data-driven, person, right? And the naturally socialites typically don't have that profile, right? And then we can work together and sort of, so I think it's sort of being true to yourself. What do you excel at and what does that mean, right? And yeah, but I think that's what I would say. Then let's take the scenario where, okay, now I need to raise money, right? Maybe I haven't built the relationships, etc. Who do I pitch to? I would say look at the people, who are a little bit like you. Because the reality is early stage investors like investing in stuff they know and feels familiar and feels comfortable. And that's, we talk about this a lot and it's unfair and all of that, but I think it's just human nature. So look for people that are a little bit like you, and then look for what they invested, right? There might also be people who don't look like you, but they have invested in a lot that looks like you, right? So look for those sort of for hints of that, because ultimately people, it's like a risk management business, right? Particularly at early stages, you don't have much to go by. And even though people don't maybe acknowledge it, but they will ultimately, looking for stuff that looks familiar and comfortable is one way to reduce risk inherently, right? Even if you don't do it consciously. So that's generally what I would recommend.
Great. So also involves a lot of research into knowing who is like you and who you respect. Nicole, what about you? How do you agree with Mia? And have you had other thoughts and considerations?
I definitely agree with Mia. What I'd add to what she said is, one is entrepreneurs, we're always pitching, like always, always, always pitching. I am surprised my friends still invite me to dinner parties because all I do is talk about my business. So first, you're always pitching. Second, I completely agree with Mia in terms of building relationships with people you like. For myself, I'm also a bit of an introvert. When I'm at a dinner party, I'm the person who has one conversation all night long. Like I find the one person I can engage with deeply, and that's why. And so it's a similar sort of phenomenon, but I think in general, it's not just build relationships with people you like because those are authentic relationships, but also recognize if you are successful, you will be partnered with this person for the next 5-10 years, and you will go through easy situations, but you'll also go through challenging ones. So having people you like, respect, they've got integrity, you share values, that's really important. Not just for optimizing, but because in success, when you actually close money from them, you're going to be with them forever. And then the third thing, again, I'd reiterate what Mia said, is there are a lot of people, what I do, it's energy infrastructure in Africa. There are a lot of people who think what I'm doing is nice, but they do not, their funds don't have permission to invest in Africa. They don't do venture, they don't do. And so doing your research to find out which funds actually have the permissions to invest in what you do definitely helps. I will say, I haven't taken this approach, but it is an approach that I thought was interesting. And there are people that I know have been very successful. They do a lot of detailed research. They find out all the funds they want to be introduced to. They find people they know who can introduce them to those funds. And I think that that's an approach. And it can be successful. It probably is still fundamentally sitting on top of relationships. It's still sitting on top of research. But yeah, those have been my experiences, and in many respects echo what Mia was saying.
Thank you so much, Nicole. Tolulope, I would be remiss if I didn't ask you the same questions of is there anything to add on to what Mia and Nicole have said about how you choose who you pitch to?
So I think I definitely, I mean, what both of them have said resonate to me, but I think more importantly for us as, I would say we view ourselves as a mission-led business, right? So we're on a mission. So one of the important things for me, and being, you know, based in Africa, trying to raise funds globally and just trying to, you know, establish the company as a global African brand would be, you know, just pitching to that client and speaking to those people that also align with the mission, you know. So is there like an alignment? Is there a value alignment? Is there a mission alignment? And do you really understand the landscape? Do you understand the economic climate in Africa? Do you understand the volatilities? And, you know, that trust, you know, do you trust us as a whole? And, you know, definitely also just, you know, based on what Mia said, relationships, right? So I think for me, what both of them have contributed really resonates with me. Yeah.
All right. I'm going to stay on with you, Tolu, because, you know, you've talked about being mission-led and the fact that you have to be mission-aligned with investors and you have to be mission-aligned with what the investor's mission is. Have there been questions, especially to you as a startup founder, that you have found it very either difficult or challenging to address from investors? Maybe two questions that have been the toughest to address that maybe you'd say, I wish I knew this before I went into that pitch or before I started pitching?
Yes, very interesting question. And yes, I mean, in terms of pitching and speaking to investors, I think for me, the early days of trying to raise funds and trying to scale the business, I mean, we're based in Nigeria. The currency in Nigeria is Naira. And you know, the first few years, a lot of investors were offering dollars, right? So most of the, I mean, all the investment that we were being offered was in dollars. And I remember there was always that fear from me of, oh my God, how are we going to raise in dollars and have this matching concept with the receivables, right? Because whatever we're selling and our clients' receivables is in Naira. So that matching concept and ensuring that we are not, you know, we're not jeopardizing investors' funds. So I think one of the questions that I usually get asked, and it was always very tough back then to address or to answer, was in terms of returns on investment, you know, because all investors will want to also ensure that whatever returns would come back in USD. And then we were also saddled with, I mean, this is the Naira, you know, constant devaluation. So how is this going to happen? So a lot of times I would say back then, because I mean, just running the business and where we are right now, it's no longer a tough question for us, because we've been able to find, I mean, more efficient ways to use funds. We're now more exposed to global landscape, to even global companies that are able to. But back then it was such a very tough question to say, how would you ensure that, you know, the returns on investment, how would you scale this business? I mean, confronted with so many variables beyond your own control in terms of, you know, fiscal regime, on how the dollar rises and falls against your currency, you know, questions that would border on things that were beyond our control, government policies and all of that. And I think another tough question back then was always, how would solar compete in the market? Because at that time, Nigerians were buying power, as I said, at, I mean, the cost of buying power as at that time was maybe 45 cents. Maybe this was about maybe 4 or 5 years ago. And this is solar, high cost of investment and all of that. So they would ask you, so who's your market? What's the market like? And, you know, how do you want to drive this in the market? How do you want to drive scalability? How do you want to scale? How do you want to drive the market to ensure that people scale to something that is more expensive? But I'm very happy to say that, I mean, these are some of the questions that over time we've been able to I mean, looking at how the market is, the energy market is in Nigeria, where, I mean, removal of subsidies, you know, the cost of diesel and, you know, other competing fuels are way higher. So solar has now been positioned and you know, very competitive and even more affordable than other alternative sources. So I'm very glad that won't be a tough question. But I mean, back then it was quite tough because it meant that we needed to work twice as hard. We needed to think, we needed to do a lot more in terms of the market education and, you know, trust, and also just building that trust with financiers. So yeah, I would say it was quite tough back then. Yeah.
Yeah. No, and I've had several points, including, yes, the return on investments, especially with currency volatility in not just Nigeria, but various African jurisdictions. That's always something that comes up. And it always, you know, government policies, how do you scale the business? How do you compete with other players in the market? And sometimes it feels like a minefield, and sometimes you don't know whether an investor has said yes or no. So I'm going to now turn this to Nicole and then to Mia on bearing all that in mind. Investors say yes or even say no for reasons that sometimes we can comprehend, but sometimes we cannot comprehend. What are some of the surprising reasons that you've had from investors on why they said yes?
You know, I've been thinking about this question for a while, and I think I am most surprised, and this actually happens consistently. I am convinced that people invest in our business because we've built a really great business. We've done really hard things, and we're able to do them profitably and have great impact. Like, I believe people are investing in that. And every single investor has said along the way, we're investing in you. And it really echoes what we were talking about before, but I always find that surprising, other than being incredibly persistent and somewhat driven. I think it says less about my character and who I am and just the personal nature of the investment process. And in the end, what people are investing in, particularly in earlier stage businesses, is not what you've built. And Mia should totally disagree with me, but it's less what you've built and more how you're going to respond to the next challenge. And that aspect of the person's humanity is what they're investing in. And so I'm always surprised when I hear that. And, you know, even to this day, with as much of a track record we have, people say that they're investing in me.
Gosh, that's fantastic and a great soundbite. It's less about what you've built, but more about how you respond to the next challenge. I think that's something to always bear in mind. What about you, Mia?
I mean, I think that makes a lot of sense. Although I would also say it's important for you to find out what matters to the investor, right? So, for example, like generally everything takes forever right now, right? In fundraising over the last 2-3 years, I would say. But I had this one investor who somebody introduced me. We had one coffee and then he sent me an email and he's ready to put in 250. And I was like, really? Like, why? Like, we haven't even but the guy was really just looking for diversification, right? He had deployed money different places. He wanted to put money in Africa. We seemed to be a reasonable choice, and he wasn't keen on sort of the development side. He wanted a commercial investment, and we just sort of fit right in, right? And sometimes the most interesting investors comes from the most interesting places. I think Persistent has a story like that as well, of an investor that maybe they didn't think would be a good fit and still took the meeting, and that investor turned out fantastic for us, right? So it's you know, investors come in very different shapes or forms and can want different things. So I would always recommend founders, when they start a pitch, not to actually start with their pitch, but first ask a few questions about the investor, right? Because sometimes I find founders that pitch to me and they like talk nonstop and the thing is finished and I'm just like, I'm sort of, I can tell like it's not going in the right direction, but they don't pause, right? They don't sort of ask me, what am I looking for? What's my ticket size? What have I invested? What's my best investment? What am I excited about? And then sort of tinker their pitch towards what would make sense, right? And it sort of wastes their time in the end because they're pitching something that might not fit and it's less of a conversation and it sort of is not good for my time either. And sometimes I don't want to be rude. Sometimes I am, but sometimes I also don't want to sort of interrupt the whole thing. But yeah, sort of I think it's important to sort of take that time and not be so tied up about your pitch, but really make it a conversation and sort of find out about the other side first, because you'll be surprised. They might not be looking for what you think you're pitching them, or they might be looking for something you could easily give them, just pitching it a little bit differently.
Yeah, and that's actually really important, just finding out what the investor considers important and asking those initial questions. And I thought we wouldn't have time to ask this question, but I'm going to ask that question to you, Mia, about when you think of especially founders as Future Africa, what are the, 3 things you want to see in their pitch? What are the 3 things that are common to almost all investors?
I think number 1 is unique insight. We read a lot of pitches, we hear a lot of pitches. If you can convey something that is unique, I would say, most business models in some shape or form we would have seen somewhere before, right? Just because, I mean, every accelerator, we get 800 applications. That in itself makes us to see a lot of things. So I would say start with a unique insight, right? Something intriguing that you have learned because you've worked at a certain company in a certain role, something you experienced yourself as a customer, and sort of link that to what you're trying to solve and why you're passionate about that. I think that's very important, because I sort of want to believe that you are the person who can build that, and it's not obvious to everybody else, right? Sort of when I think back of my sort of best pitches, I always think I walk away and I almost want to retell the story to somebody. Guess what this person has told me and what I've learned, right? And I think linked to that is keep it very simple. I think sometimes I get the feeling that founders are trying to make things quite complex, and investors often don't want to ask silly questions. They don't want to admit that maybe they didn't get what you are telling them. So make it quite simple and break it down to that, right? Without exaggerating. But so what's your insight and what does it mean for your business? And when I look back at sort of the investments that performed the best, founders were incredibly good at making what they're building very simple and sort of almost like you're like, okay, that makes so much sense to me, right? So that's important. And then obviously link sort of why are you and your team now well positioned to solve that? For me, then I will look, and that comes back to Nicole's point also in terms at sort of resilience indicators in their life, because this startup journey is incredibly hard and it throws a lot of things at you, and you're going through incredible ups and downs, right? And you probably thinking of giving up a lot of times, but what keeps you at the table? As an investor, I sort of want to have the feeling that this person are gonna look it through no matter what it takes, right? Sort of what, and sort of I will try to understand why they're passionate about it, but also sort of setbacks they've had in the past and how they reacted to it. Sometimes going all the way to like your child and what you've experienced, right? You really want to understand what sort of drives this founder to take this rather difficult journey when they could, be in a safe corporate job somewhere making a lot of money, right? Sort of what makes them that insane that they want to sort of see this through with all the risk and everything and hard work and weekends and all that it entails.
Yeah. So that's fantastic. And I think my takeaways are unique insight, keeping it very simple, so simplicity, and then the resilience indicators from the founder and for the team. Why are you passionate? Okay, so we've talked to the investor, we've attracted the investor, we have gotten a term sheet, we are roaring to go. It's time to negotiate. What, Nicole, are the key negotiation points that you would say in a lot of your investments you have focused on?
I'm interested to hear what Mia says about this, but from an entrepreneurial perspective, I would love to focus on valuation. Focusing on valuation means you have choice. And in reality, in the markets in which I'm operating, to the extent that we're working with multiple investors, they all know each other, and so they all kind of converge on valuation and work together. So I find valuation to be less of a negotiation point. And instead, we're looking at things like board composition, making sure that we're able to have our vision be one that's recognized. And the interesting thing is, in that negotiation, it's a lot less around the endpoints and more around the relationship that you build through what can be a little bit of a conflict. And it's how you work through it with the investor that actually is more important. For me, those were the two biggest points. I mean, there are a bunch of other points, again, things that can pertain to how you and your team are compensated. That can be very important. There are constraints around things that can constrain your growth. So limitations to indebtedness, limitations to looking at new markets. And so when I've negotiated, I've looked for flexibility, but more than that, alignment and trust.
Alignment and trust, and also I guess that goes into, and you talked about board representation, that also goes into control.
Yes.
And how much control you give away.
Exactly.
All right. Now, before me, I'll be hear from you from an investor perspective. Tolu, as a growing entrepreneur coming up, what are the things that keep you awake at night when you think of investor negotiations? Is it what Nicole has said? Are there some additions?
Yes. So I would say that for Digiscape, we've actually maybe sat through some investor negotiations. And I think for me, always on my mind is equity versus control, because I mean you actually said that, right? Control. And one of the things I like to just, I mean, when we are at that table, is I like to lay it keep it very simple, right? In terms of the sector that we're playing in. Energy, for me, is the bedrock of every economy. So we're very important. So I'm actually aware that we are high growth, we're very high potential. And for as long as there's human life on Earth, everybody will need energy, So for me, it's just looking at the future and having that vision, and always putting that vision in mind to say, okay, so how much control do I want to relinquish? How much control do I want to let go of? How much equity, what will be the cost of this equity? I mean, and then a lot of investors looking at where we are and where we want to go. I've actually found very interesting conversations, and we're being offered some sort of like, okay, no, this is what we are offering you right now. And as Nicole said, the valuation, we know what we are worth, we know the kind of work that we put in, we know the kind of sweat, equity, grit, and we also see the future. We see industrialization and all of this ahead of us. We see how Africa is going to grow. We see all the great potential, so not giving too much away. So for me, it's really just having that balance of equity and control. Control in terms of, protecting the vision of the company, protecting the founder's vision, right? Protecting what we see, protecting the future, protecting the mission, that we stay on track and all of that. So yes, I think, yeah. And also another thing that I would always put on the table and have in front of me would be in terms of compensation, use of funds and compensation, as Nicola said. So I think those are some of the points that I would that keeps me up at night, and yet I always just lay it straight, like, let's just keep it simple. These are some of the things that I think is a deal breaker for us. So yeah.
Thanks a lot, Tolu. Now, before Mia speaks, let me just remind everyone that we'll shortly be going into our Q&A session. So please post your questions on the Q&A tab or even in the chat if you're finding trouble seeing the Q&A tab. We'd love to take your questions. Mia, we are hearing from the founders some of the sticky points in negotiation with investors. How do you look at it from your point of view, especially as an investor? The issues of control, issues of valuation, issues of compensation.
Yeah.
What's your take on that?
I mean, it's hard to say this generic for every investor because also it matters, right? Are you a DFI backed fund? Are you a commercial fund? You are fundamentally looking for different things. Me, I'm a commercially backed fund and I need to return capital with a multiple. So for me, valuation is always quite important, right? Because I know I'm coming in at the beginning of the capital stack. I'm going to be bullied by people who come later, and that happens all the time. So I think for me, there's a level of protections against that level of bullying, and there's valuation, right? And I also know I can add a lot of value in terms of revenue generation to my startup. So if I don't feel I can, then I wouldn't invest because sort of these two go together, right? I can't also push for an attractive valuation if I'm just handing over a check and then we'll see you in 5 years at the exit, right? That's not going to work. So sort of I know we are a firm of builders, we can open a lot of doors, we can add a lot of value, but the valuation sort of needs to speak to it. When it comes to founder compensation, I always have, I think right now, the market we are in, you need to get to profitability quickly, right? Because you can never assume there's one additional dollar coming into your business for most of our companies. And hopefully there is, but there's a good chance there's not, based on what we've seen, right? So the question is, how can you get, with this cash, how can you get to profitability on the quickest possible path? And maybe that means you don't grow as fast, but how do you get there, right? And then I think founder compensation then follows from that, right? Because you then have to understand how much do we have to spend to get to a certain amount, and how do we then allocate these resources, right? And so I don't like to say a founder needs to make X, right? That really depends on how much the business can afford. And once they get to profitability, particular, as long as it's somewhat reasonable, I'm not going to say it's too much or too little or anything, right? But it's important for me that you get to profitability, right? So you can't be highly unprofitable, need to raise a lot more money to get to profitability, and at the same time, the founding team has really high salaries, right? So those don't speak together. If you're a business that gets profitable quickly, you're now very profitable. You can, I wouldn't say you can pay what you want, but within reason, right? Then we are very flexible, right? As long as it sort of aligns everybody's incentives. And you would hope by that time, anyways, your upside is a lot higher from the equity. But also equity takes long to generate, right? So founders shouldn't always feel like every single day they're making these huge trade-offs that put their family at risk, that create a lot of conflicts internally. They should also have their mind free, right? But so we are at different phases of the business. So at the phase where I'm investing, the conversation is always like, if this is the last money you get, the money you get from us, how will we survive, right? How will you get to a point where you recover, the cost of your business? Because then once you reach that point, the whole world changes, right? You can decide to raise, you can decide not to raise, you can determine your growth path. There's so many things, right? So, but that's very specific to my stage of investing. A growth investor might look at completely different things, right? Maybe there's more investors. Now you have to deal with aligning all of them. There's control questions, there's etc., which are maybe less important at my stage, where I'm often the only investor. It's just me and the the founders, and we're all in the same boat. But then later things maybe get a bit more complicated.
Thanks a lot, Mia. Now, before we go to Q&A, I want to ask one question to each of you, which is, in all the scenarios we've discussed, right? We've discussed, journey and lesson learned. We've discussed approaching investors and pitching. We've discussed negotiation and actually getting to a close of a transaction. Have you, as whether as founders or as a fund investor, did you ever feel a gender disadvantage or a gender bias in all those situations? And how did you try to make up for it, or how did you try to solve for it? I'm going to pose this question to Nicole. You're quite seasoned in your fundraising journey as a founder. So Nicole, then Tolu, then Mia.
I've been fortunate in a profound sense. I have always felt like investors have been rooting for me. The investors that I've spoken to, and I've raised all the money that I've raised has been in an international context, either American or European investors. And, they want this little startup solving energy access in Africa to succeed, and they like me well enough. So I always feel like they're rooting for me. However, I also feel like they may not be as cognizant of their biases as they could be. And I haven't noticed the biases, but I do look at the results, of the nearly 20 investors. My career was investment banking. It's a bunch of things. It's typically been a male-dominated career. I've worked in male-dominated spaces. My professional relationships have been those. And of the 20 investors that I've had, I would say, and certainly at the pre-institutional level, easily 80% of them have been women and people of color. And so on the one hand, I've seen no bias. And on the other hand, the results are the results. And those biases may be because of the people that I've been most comfortable reaching out to, but I think it has to do with, again, the depth of relationships and the depth of trust. And I also think that there are some unconscious biases and signals. For instance, typically research has shown that investors will ask men about the growth potential of their business, and they'll ask women about the risk. And when asking about the risk, you're already setting the stage for a downside conversation, which does not inspire you to invest. That's just the data. And I have seen results that sort of reflect that data. I will go back to the story that I started with, and I think that was part of the revolution and the evolution of my thinking of I know my story, I'm going to pitch. That was pitch it, and it wasn't a statement that you shouldn't answer investor questions, but more that if you were confident in your story, then it's less likely to be derailed by kind of the other people's contexts. And so, I've taken that approach. I've generally had a very positive experience, but that said, the data is the data.
Thank you very much, Nicole. What about you, Tolu?
So I would say that for me, bias is real. But I mean, bias cannot trump purpose. It cannot trump grit or, the hard work and the sweat that you put in your business. And on this journey, I mean, running Digiscape in the past 8 years, I've actually encountered, different sort of biases. And as Nicole said, unconscious bias. Sometimes you don't even realize how inherent these biases are. So I would say for me, we have a lot of funds, we have a lot of investors, saying they want to support. I mean, a lot of times you see, oh, impact driven, they want to support women and all of that, but is that just lip service? Because beyond that, beyond the surface, what exactly are the requirements? Are those requirements for financing, are they really friendly to women-owned businesses, or is just greenwashing and paying lip service? And I realized that beyond the surface, when you rip the covers, it's really inherent, right? So it's really beneath the surface. It's right there in the requirements, in the pitch, in the questions that they ask. You know, and sometimes you just find that sometimes you find some investors feel that, you know, it's maybe women are pushover, so it's really easier for you to negotiate with women and for you to demand equity and to demand control and all of that. And I think for me, that's a bias, because you feel like she's not really worth standing, and, you know, she's not really worth the journey and all of that she has put in the business. You know, you feel that if it's a male-owned business, or a man, I mean, at the helm of affairs, maybe you can bully him into submission and all of that. So I think for me, I've encountered biases, unconscious bias, inherent bias, and even bias that is beyond the surface, and, you know, a lot of lip service being played to impact-driven, women-driven businesses and all of that. So yes, and it's a journey. It's a journey, but I feel for me, it's really that strength to stay and to insist on a level playing field. So yeah.
Yeah. No, thank you very much, Tolu. Now, Mia, as you answer that question also briefly, I'm also opening up the questions in the Q&A box. Thank you. It's now a flood, so be careful what you wish for. One of the interesting questions that has come in is, have you ever turned down funding? And if yes, why? And I'm curious to know from you whether that, you know, bias could have been a reason to turn down funding. Mia.
How do we turn down funding? I mean, we are actively sort of turning down certain types of funding that are prevalent in the market. Not at the stage where we're having conversation, we're just not seeking the conversation. And that's not a bias, well, might be a racial bias, I think, that we are seeing there. But it's also a bias towards how we operate, what we stand for, what we are trying to achieve, which is not, we feel, in line with what these funders want to achieve. And we do think there's a racial bias as well. So that's a group of funders we are consistently not engaging, I would say. I don't think that there's a particular female bias more than anywhere else, but so that's what I would say. It's not that they have offered us funding either. But we are making a conscious decision not to engage.
Is it because you know where the road is going to lead anyway, so you'd rather just not engage?
We are aware of the biases, but we also know that the funding comes with certain constraints that would make us unable to perform the way we want to perform. It comes with certain requirements on how we invest, what we invest in, etc., that we don't necessarily want to adhere to, and it's not in line with our strategy. So that the funding is sort of misaligned to what we're trying to achieve.
All right. Nicole, let me turn to you and just ask, just still on that line, have you ever turned down funding? Simple answer, and then also answer the next question, which is, have your investors been hands-on in terms of either management or helping you look for funding?
I don't know that we've turned, so I don't know that we've turned down funding per se, but there definitely has been misaligned funding that I have foot dragged on so long that it just didn't work or didn't make sense in the end. I don't remember consciously saying no to someone, but I have said, I'm not sure this is a fit. But investors being helpful. Again, my investors are primarily in the US, and I hear stories of investors being incredibly helpful. In fact, there was a recent article sort of correlating exit performance with very specific VCs, and the really what it came down to is that the VCs weren't picking winners, but rather creating winners through their networks and through how they promoted the businesses and who they could introduce the business to for the next round. Don't know if it's fact, it was a study, but it was compelling for me. And I don't think I have those relationships, in part because my investors are really excited about what we do, but their networks are very different. That said, I really appreciate them as business advisors. I really appreciate them as partners on the walk with me, sometimes sprint. And you know, I am in London because they have invited me to come meet other investors here so they're trying to help where they can. So yes, I think we've got a strong group of people who are really interested. I do think that if you've got choices, you can look at, are these investors that do have relationships? Are these investors who have had successful exits in your market? And be perhaps a bit more selective. I was looking for something else, but that might be something that you do look for.
No, that's really insightful. And I guess it goes also to the whole question about research and researching the investors and who you want to have relationships with, and on whether also that the investors have had a track record in being hands-on and in really promoting their founders. Now, I'm going to switch gears and go to another question that goes to the sensitivities of, again, whether it's conscious or unconscious bias. We have a question here that asks whether any of you have navigated situations where you have encountered either subtle or overtly sexist or racist remarks, for instance, during investor meetings where you have to be prim and proper, or where there's a, power imbalance. Have you navigated that? And also, if you have had to process it later, how do you come up with ways to have a constructive dialogue? I'll open it up to the floor. Anybody who wants to take the question, please do.
I would say I haven't, but most of my pitching now is also on the screen. So maybe in person on the screen could be different, I suspect.
Yeah.
Maybe others have experience.
I will say I also have not, but I have a number of friends who have, and what I would say is it is real, and your experience, if someone is dealing with that, like your experience is your experience and you should honor it. You didn't do anything wrong. If that is an experience you've had, it is their problem. And interestingly, I am in this group of clean tech not investors, but companies. And one of the things, it's mixed women and men, but one of the things that we did was we created a list of funds not to work with because they have been overtly sexist with women. And legitimately sexually harassing. So I think it's real. It is, if it's happened to you, you should not work with them. It's worth it to share that experience with other people so that other people can avoid them as well.
Yeah. And I suppose that also goes to me as point of just knowing, for her, she knows, I think you mentioned that there are just people you don't pitch to even. What about you, Tolu?
I wouldn't say I have in the real sense of it, but I know that I've been at events or pitching events where I just felt maybe there's a lot of questions being thrown around about investing in Africa, and almost like and I felt overwhelmed because it just felt like maybe maybe Africa, maybe a lot of entrepreneurs in Africa, we didn't know what we're doing. And maybe we're having a lot of startups that were failing in Africa, and I really felt it affected me. So it wasn't like a direct jab at me or a comment, but I felt a bit overwhelmed, like everywhere to turn. But for me, it was almost just having that not being very confrontational, but having a story and just being very real in that moment to say, you know what, this is just a lot of generalization, right? And bringing and using like real life examples to answer questions like, and I would say, look at this founder, look at this investor, look at this company, and see what they, so for me, it was more about then showcasing the success stories that I know and I've heard about, and just trying to douse that tension in the room about African founders, which I found a bit racist, because I feel that beyond being a founder, we're all human beings, beyond being African, beyond coming from here. I mean, the first thing is who you are as a person and, as an entrepreneur. And, as you said, investors invest in the people, right? So it's beyond just being African, and any startup can rise and fall. But look at all the success stories and look at what we have in Africa. Look at the potentials. I would say maybe just being in some sort of like a racist in a room where there's just a lot of tension about investing in Africa and a lot of questions. So yeah, and just for me, it was just staying authentic and sharing success stories that I know about. Yeah.
Oh, thank you very much. That's very profound. We have another question here that goes back to what we discussed initially on building relationships, especially, I guess this is someone who identifies as an introvert, so an introverted founder. What strategies can you have to build relationships and trust with prospective investors? Again, opening it up to, I suppose, Nicole, because you've been on this journey for quite a while. What strategies have you employed to really build trust with a small pool of investors?
So first of all, I'm an introvert, strong one. People are confused when they find that out, but I'm definitely an introvert. And I wouldn't be surprised if most founders are. I don't know if that's true, but I wouldn't be surprised. So don't consider that to be an obstacle. I build relationships the same way I build all relationships. And I think that that's perhaps the key is I don't build relationships just because I think they can get me somewhere. I build relationships with people I like, people I have something in common with, and that's it. And yes, I talk to more people in the funding world, and yes, we have something in common, but I build relationships with people that I like. And that's really the only way I'm good at it. The other strategy I have is one, putting myself in events where I know other people, being an introvert, not know other people, where there might be funders, and being an introvert, I find those events a little overwhelming and exhausting. So I make sure I rest up beforehand, first of all. And secondly, there are times when I'm like, I just have to talk to 3 people before I leave. I need to have 3 good conversations and then I can go. Usually I end up enjoying it and I'll stay longer, but I will say that part of being an entrepreneur, and I'll also say being an entrepreneur in Africa, is sometimes it's hard and you do things that are hard. And I want to say uncomfortable, but I don't mean in the sense of ethically or morally uncomfortable, just you put yourself in uncomfortable places because you're pushing for a mission. And so this is just one of the things that you do that are a little uncomfortable, but where things are uncomfortable, there's growth.
Thanks a lot, Nicole. What about you, Tolu?
So I would say that for me, I am an extroverted introvert, if there's anything like that. Because
a balance.
Yes, there's a balance, because and what I try to do, I think now growing up and just being an entrepreneur, you tend to be more introverted. So Nicole, I definitely agree with you, because you're so focused on what you're trying to do. You're focused on building, and when you're building, it's not that time to be everywhere. So you find yourself more introverted. I think for me, what has really worked is for every event that I go to, I have maybe a target. I want to speak to maybe 3, 4, 5 people max, so that I don't burn out, because you can actually burn yourself out. And I don't try to network anymore. And I think that word has really been overused. I don't try to network. I just want to have meaningful conversations, right? I want to go somewhere and, it's a big event, it's a webinar, it's a conference and all of that. And, say hello, share maybe not even cards. I mean, gone are the days where you're sharing complimentary cards and all of that. I just really want to have I have the first conversation and in my head, I'm checking within 1 or 2 minutes, would this lead to something more meaningful and all of that? It's not because of the person, but what it might also be what I have in my head at that time, right? What is especially important to me at that time. I mean, maybe after speaking to 2-3 people, I then find that niche where, we're then connecting. I think it's also good that as entrepreneurs, we're broad, not just myopic or narrow about the kind of conversation. So sometimes I'm in a room and I'm not even talking about my business, right? We're talking about something that is very relevant. But I know that at the end of the day, you will get to know each other, we'll get to know about what we do. So for me, it's really about connecting, about the conversation, much more about, networking and saying, this is who I am. And I mean, just also leveraging on storytelling, to be honest, like storytelling, just talking about the journey, talking about and then listening. I think those are some of the things that has really helped to build. And then you find out that this person knows somebody else. And I mean, the power of referrals with investors. You might not really be speaking with the investor, but you might be speaking with someone that knows someone and finds you very authentic and finds your story very, very interesting and exciting to share. So I think for me, that has really helped me to bridge that gap. Yeah.
Thank you. Thank you very much, Tolu. I'm going to ask this question to Mia because that's probably something we face as fund managers as well. Have you ever felt pressure to change your product or your team to fit the investors' expectations? What have you done, or have you heard of people who have had to feel the pressure to change their offering? Yeah.
Yeah, I mean, I think the reality is fundraising is hard, right? And if I look at the African continent, most funding is coming from DFIs, right? And it's very tempting to sort of try to fit their mold of what they're looking for, but you also have to sort of ask the realistic question, is that what you're actually trying to build? And is this long-term, it might be short-term helping you, but is this long-term what you stand for, right? And I sometimes find it difficult to say, okay, can we just maybe find a middle ground, still do what we need to do, but sort of make it still work? And I think I'm working with a partner who's always putting me back to order to say, no, this is not what we stand for. And we have to, as hard as it is, we have to sort of stay course. And I'm quite a practical person. Sometimes it's like, okay, we need to raise money. These people have money. Sort of, can we fit in there, right? And then it's sort of that dichotomy that you're dealing with sometimes. And I think we've ultimately, and I think that's not to my credit, that's probably to my partner's credit, we've sort of stayed on the right path of staying true to who we are and what we want to try. But it's not easy, right? Because you have to pay team members, you have to pay salaries, you have to sort of grow, right? Sort of there's a lot of sort of things that maybe sometimes are in conflict to each other, but I guess ultimately focusing on the long term, what you want to do long term and the legacy you want to leave is the right thing to do, but it's not easy. So we haven't done what you said, but I wouldn't say I never played with the idea that we could.
Yeah. And I guess the trick is finding the balance between listening to your potential investors, whether there's any value in what they're telling you, versus still maintaining the authenticity and the mission and the path that you're on. I'm going to ask this last question because we have 4 minutes to the end of the webinar to Nicole and Tolulope. It's a question that also has a bit of a controversial twist at the end. Are there gender-focused programs or resources that you have found particularly helpful? Or did you find that most of the useful resources did not necessarily have an explicit gender lens? Nicole?
I think Tolu can go first.
Tolu? Yeah.
I was trying to dig deep into.
Dig deep.
So in terms of gender-focused programs, right? I think we've been part of I mean, I think maybe one of it would be being working with one of the financial advisories that we worked with, and of course they had the gender lens because they were looking for female-led businesses so I think I found that a very useful resource. And what they then did was they matched us with a female advisor that had extensive knowledge of building in Africa. And we've worked with them for about 2 years. And at every point in time, they've really helped us they've actually really helped to shape, the business and how we do business and how we see the global landscape and how we see finances. So I would say, to be honest, I've had like maybe useful resources and also been part of gender lens networks, women focused networks, female accelerators and things like that, right? So I found them very, very useful because that means that you are in a room where the kind of challenges that you face, you're not alone. It's maybe whatever challenges you're facing, that there's somebody else in the same room that has either gone through it or is facing it. So it helps just make things easier for you. I don't think, I mean, some organizations will maybe pay lip service to the gender lens, but to be honest, I think for me, I've really been at the end of the stick where it's really helped, and I'm able to come up to say, what, we can't do this. We're struggling with this. We have these challenges, and maybe these challenges are actually gender focused, and maybe because we're a female-led business, and this is why. But I'm better able to articulate myself and also get like more support. So I think it's really worked. There are a lot of gender focused programs. It's not lip service. It really works if you also put in, and if you also put in your heart and your own passion into it to say, what, I'm also not here to draw. I'm actually here to also support other people with my own stories and what has worked for me. So yeah.
Thank you, Tolu. Nicole?
I'm really glad to hear of Tolu's really, it sounds like profound and great experiences. I have had fewer experiences with explicit gender lens programs, but I think part of what you were talking to was just the value of community. And it's often said that being an entrepreneur, and particularly an entrepreneur fundraising, it's lonely and it's hard. And I think there's a real power and import in finding the communities of people who give you strength. And that, it definitely can be all female spaces or programs designed to support women. It can also be with, some of your closest friends that you've known since the age of 12. Whatever that group is, I think it's really, really critical that you have that support and that support network, because it's hard. Where if what we were doing was easy, everyone would do it. And so I honor the people who do it, including Tolu and Mia.
Thank you very much. We are on time, but I know, Mia, you have an amazing program that's, not specifically gender lens, but really beneficial to female founders as well. Do you want to talk a little bit about what you are doing with Accelerate Africa?
You mean specifically for female founders, or
for
general?
female, non-female, because I know it's equal benefit.
Yeah. I mean, Accelerate really focuses on helping you get to the $1 million mark quicker. So we run an accelerator of 12 weeks, and we have startups at various ranges between 0 and 1 million in that accelerator, and 80% of what we do in the accelerator is business development, like helping you to get your product out, helping you to find your first customer, signing some larger corporate contracts or government in some instances, and moving you along on that line as quickly as possible. We have a demo day towards the end where we then focus a little bit on pitching, but we always feel like we don't want you to pitch to nowhere, right? The most important thing is to get to that $1 million revenue mark, which is very often coincides with profitability, as we see from our experience. And we don't do anything specific to female founders, but we find taking female founders into the rooms of corporates and closing that trust gap can be quite powerful. And because I think they sometimes have a harder time getting in there, but once they're in there, they perform better in sort of in sort of building and growing that relationship. Because I think there's sort of the hunter versus farmer, and I think as females we tend to be very great once we have established that trust to build these relationships and leverage on them. And obviously, I'm talking terribly black and white here, but that's a little bit the experience.
No, thank you. And those are really great insights. And I wanted particularly also to hear from you, Mia, which you have about the work that you're doing at Accelerate Africa. So for any founder who's listening in, early stage founders that need to get to their 1 million mark, that are pre-revenue even, please look up Accelerate Africa or Future Africa. Please also look up Persistent. Aside from being an early stage investor and venture builder where we provide hands-on support, ticket sizes of between 250,000 to $1 million as fast ticket sizes. We also advise equity funds and debt funds that invest at growth stage. So whether you're an early stage investor or early stage company or late stage company, please get in touch. And the same also, this is not paid advertising, but for those who ask the questions, there are various programs run by 2X Global, including a program called 2X Ignite. There are also programs run by other investors, DFIs, foundations like Shell Foundation, MasterCard Foundation. If you go on their website or just Google opportunities for either female founders or first-time fund managers, for the person who asked that question, Ruth, you're going to get those resources. And you'll also see resources on the websites for both Future Africa and Persistent. And feel free as well to get in touch with Tolulope on her experience, to Nicole on her experience for any burning questions. They are available on LinkedIn. I think I can say that if you message them, they will respond to your message. And the same goes for me, and the same goes for Mia. We hope that you have found this session insightful. We hope that some of the questions that have been most burning have been answered. And most of all, we hope that whether it's female founders or African founders and fund managers, you know that you're not alone. Because each of us have walked through this journey and have some lessons learned. And that's why we are still in this business after many, many years. And also for the investors that are in the room, these are 2 companies that you really need to invest in. And for the capital allocators, these are 2 fund managers that you really need to invest in. So there's a lot to go around. Thank you very, very much for everyone that joined us today. And look out for the next webinar invite from us. Thank you very much. Have a great day and wonderful weekend ahead. Bye-bye.
Thanks so much.
Everyone.
Bye-bye.
Bye, everyone.